Good evening. Ira Epstein with your Metal Market Report, and this is for Wednesday, the 28th of May, 2025. So welcome. What an interesting time. We have a lot of data coming out tomorrow. You've got the second look at the first quarter GDP. They're expecting it to come in, when you look at it, negative 0.3% quarter over quarter terms. We're going to get jobless claims. They're expecting it at 228, about 1,000 higher. Richmond Fed President Barkin will participate in a fireside chat at the Housing Partnership Network event on Thursday morning. That's a mouthful. The National Association of Realtors, April U.S. pending home sales, well, that comes out at 9. EIA natural gas storage report, and we'll get the EIA. We're going to get the EIA natural gas storage report, and they're forecasting that at 95 billion. We're also going to get the EIA regular oil report. Everything gets shifted around that was supposed to come out a bit earlier due to the Memorial Day holiday. Another event. NVIDIA beats on most numbers. They're up in the pre-market about $5. Another big boy is Salesforce is up. So you would think that's going to help the stock markets. And I think it could. So let's take a look at what we've got. If I would hit the right fingers here, we'd be right there. Because you're up in those two, and especially the weighting of NVIDIA, you're up 160 points in the NASDAQ right now, not carrying very much in the Russell. You're sitting here up 60 points in the Dow and up 28 points at this point in the S&P. In the gold, we're down $11, down 10 cents in the silver. Copper, sort of flat right here. And the platinum market, interesting, is in a moment you'll see that market has turned around. It's probably in a corrective mode. Energy markets at this point seem to be coming down. A lot of pressure happening in natural gas, and that's what I did that special report on. And I don't mind telling you, win, lose, or draw, today was the entry day for a lot of people that have my subscription. So we'll see how that works out. All right, so maybe we go take a look at what the chart action looks like. And in the gold market, as we see, you're sort of just drifting in this market at this point in time. When you take a look at the daily bar chart, obviously the drift would end if you took out 4 days ago's high. But until that takes place, what you've had is higher lows, higher highs to that point, with the market fighting. I've told you that. It keeps fighting at the 18-day average of closes. We now have been doing that for 1, 2, 3, 4, 5, 6, 7 days. So almost a week and a quarter that we're sitting there fighting at that number, looking for where's the next direction going to be. At this point, as long as you can stay over 390, 32.90.80, I'd have upside bias. You're not there right now. You're about $8 lower, so you have downside bias. My work isn't doing much of anything right here. The overall trend from the swing line up, but if you lose the bias by closing under that 18-day average, that'll be a problem. To get the market going again, you don't have to really take out that high. If you can reverse from here and get over the highs of today, Wednesday, you could attract buying with that. As we look at the slow stochastics, they're just coming up. We then go to the gold-silver ratio, and as you can see, this market's sort of slipping back. I forgot to change this to the August gold. I'm going to do that soon, but June gold trades late in June, so maybe we just keep it that way. It just the ratio spread. Maybe that's the smartest thing to do. In the July silver, the other day when the market got up here, I know traders were saying to me, I occasionally I get an email, people will call, Ira, what do you see? I said, it's the Bollinger Band. I think the pros are coming out. You're overbought. I could see it going back down to the 18 and 100-day averages potentially, and looking to see what do I do when I grow up. And that's where you're at. You got to close under those numbers to get a little bearish, and if that happened, then I could argue even lower prices. I don't know what to expect in that market, so you don't have to expect anything. The same identical thing happened if you're taking a look at copper. So what you're getting in the metals is markets that aren't following through, but you're getting spikes back and forth. That's, generally speaking, a great setup for pivot points. I'll talk to you about that in 1 minute. In the platinum, as I told you, you're starting to lose the embedded reading. You're flirting with doing it right here, right now. If it closes down today, it's up $2. Be careful, it's probably going to be lost, and prices might want to retreat back to wherever that 18-day average comes in. It's a pivotal day tomorrow for this market. In the dollar index, I'm going to repeat, you got up to the Bollinger Band, you failed, you came back. You didn't even hang very long, 3 days of hanging around the 18-day average, then you plunged again, and now you're coming back up in this market. Now, this is Wednesday, May 28th. Remember, by switching over, and soon we'll be switching over into the Septembers and the other markets, but nothing going on there just yet, all right? Too early to switch. All the volume's still in the June goal. As I told you just a moment ago, this is the opportunity, and I'm looking at it and watching what these are doing, with how do you work with slow stochastics, expanded in the market, pivot points, how do you put it all together? I give you a 3-part series. In it, I explain in detail the theory of the pivot point, the formula, how traders use it, how I've added momentum by using a slow stochastic to it, and I truly believe it changes the probabilities of what the trade might or might not do. Because what a pivot point's doing is you're looking for potential sells above the market, buys below it. It is not a position trading tool. It is an in and out tool during the day, and the more volatile market, the better I like this tool. How do I use it? I sometimes look and I say, okay, I want to get long or short at this number. Here we are, and because I'm by nature not a day trader, I'm a day trader when I'm wrong, I'll tell you that. But when I'm right, it's rare that you're a day trader, although today in natural gas, part of that did work out. What you're looking for is to see what it will do from there. And take the course. It's free. Go to iraepstein.com, free offers. You'll see the pivot point course. Sign up for it. We'll send it out to you. I'm Ira. You have yourself a great evening. I'll catch up with you all in the other videos tonight or first thing in the morning. You take care.